Traders, just a quick update for you here on the Spitfire Scalper, looking at oil and the go-to rule sets that we look at in the room. SOS3 to get in. That's a center line, candle, and arrow, all the same color at the same time to be long or short. White is bullish, black is bearish. We're talking about fixed stops and fixed targets, 18 ticks, a real good one to look at, and then the fib exit, red or green line for a second contract. And just looking at the first 2 weeks of April here, I've got some numbers to show you. That exact same rule set for 3 hours in the morning, looking at 8:15 to 11:15 Central, did 2,180. Okay, the win percentage was at just over 47%, almost 48. All the winning trades came being short. Okay, so I actually booked a loss on the long trades there, and that's just the straight up rule set that I just explained there. SOS3 to get in, 18 tick stop, exit on 18 tick fixed target, and then second contract exits on the fib. And of course, if something happens before then, we're either going to book the initial stop altogether, or we could see something that's sort of a mix. Maybe we hit our 18 tick target and the fib is out at a midpoint that's slightly in the money or slightly less than the initial stop. So with that being said, one of the things that I've directed traders to do in terms of being more defensive is to come up with a value, a price value in terms of how many ticks price has moved in favor, but we don't have any exits booked yet. And anywhere from 10 to 15 ticks is typically the area to look at. I'm pushing the envelope here and looking at 15 ticks. That means that if price moves 15 ticks in favor, we move stops to break even. And in doing so, the exact same rule set moves us from 2,180 up to 3,080 for just the first 2 weeks of April here. Okay, it also pushes the win rate up to 60% from 48, so that's a nice move there as well. And then looking at the 528 tick, another great period value to look at for oil, 2,950, fewer trades and actually a slightly higher win ratio. So that 528 tick showing why it's a nice period value to use there for oil. So that's all driven by this phenomenon here. You might have noticed this at the beginning. You can see impulse energy here coming from the white arrow, white center line, white candle. You can see some chop here, a short signal that stops and reverses to long, that stops and reverses to short. None of those had the initial stops hit, but they all book losses in terms of the reversals. Then the next move here, huge momentum run, and that helps negate some of these losses here. So staying in the flow is what allows us to get to this nice expectancy level. Here's another thing to consider. On the initial performance that I showed you for the 432 tick chart, the distribution of winners and losers in this zone here, you can see that the greatest losses are limited by our initial stop loss. That's as much loss as we're going to see. Okay, and then you can see the same zone here for our fixed target of 18 ticks. There's sort of a plateau there. And then these gains here happen to be somewhere between our entry and that fixed target. And these could come from the fib getting out or a reversal happening that was in the money. Okay, now these few extremity moves here, these are where the fibs really help to capture some nice open position profit. Okay, moving to that defensive idea of moving your stop to break even after moving 15 ticks in favor, look what happens to the area where we had some of the losing trades. This entire zone here and here, all these guys, they're gone, and they've been moved to break even. You see a lot more sitting at break even now. Just a nice graphic representation of how that is working out and why it works. So there's a great look at oil, two of our favorite period values to look at on the good old Spitfire Scalper. That'll do it for now. We'll see you in the live room.